Hello and welcome back to Dirhams and Dollars, the Gulf News Business Podcast. I'm Ed Clowes.
And I'm Sarah Dia.
And today we are talking about oil, the most important subject in the world, bar none, forever and ever. Tomorrow is the meeting of Opec in Vienna, May 25th, and they're largely expected to agree a 9-month extension to the production cuts that have already been in place since the beginning of this year. OPEC's mission with this has been to curb supply and therefore to increase demand. And they've had limited success in driving up the price of oil. Wouldn't you agree, Sarah?
Yeah, I think I would agree with that. The deal came into effect 1st of January, I think it was. But so far, oil prices haven't gone up that much.
Yeah, and all of the gains that they did make were wiped out about a week and a half ago when the price tanked and dropped below $50 again. So, all of those gains were sort of wiped off and really OPEC was back to square one. And of course,
the problem is I think they will always find themselves getting back to square one simply because of shale in the US. At any point when prices rise, shale producers will come into the market, which means that this just creates a cycle of increased supply, and then OPEC obviously has to step in because prices drop, and it's just going to keep going that way.
For how long?
That's a very good question. I don't know until maybe Shale and OPEC agree on something, possibly until, I don't know, what's the bottom? The bottom is, I think, in the 20s range for Brent.
Yeah, I think the idea of some sort of agreement between OPEC and US producers is quite far off still. The US rig count crossed 900 for the first time in 2 years yesterday. So shale output is just continually increasing. US shale producers coming online, as you say, as the price increases. And this is a real headache for OPEC because, what do they do? How do they combat this? It's a vicious cycle.
It is a vicious cycle, and it's made even more complicated by the fact that they chose to stick to prices. Their previous strategy was it's just all about the market share, and they will keep pumping and pumping until they drown out the shale producers and they get all the market share they can. But now they've changed their strategy and they've decided, you know what, no, we need prices more than we need market share. So, it's a tough battle they have in front of them.
Yes, and, as we saw prices drop a couple of years ago, people sort of questioned the viability of shale, which, of course, is more expensive to extract than crude or Brent. And, now prices are back on the rise. Shale's come back into the fold in a massive way and probably in a way that OPEC didn't quite bank on. So at Thursday's meeting of OPEC in Vienna, oil-producing countries are expected to announce this extension to the agreement. We've heard that they're discussing a 6-month extension, a 9-month extension, and a 12-month extension.
I should mention that the UAE's Minister of Energy today put out a statement saying that they support an extension. I think the consensus is OPEC will extend the deal.
It does seem to be the consensus that OPEC are going to extend the cuts. Russia is on board. Iraq is on board. And these were two of the sort of problem children. Obviously, Russia is not an OPEC country, but this was a not OPEC and a non-OPEC agreement when it was first outlined at the end of last year. And
I think that very fact that OPEC came together on the table with non-OPEC tells you just how much they desperately wanted that deal to come through in order to push prices up.
Yes, yeah, absolutely. And, one can't understate the importance of Thursday's meeting. What OPEC decides to do will impact markets across the world, from commodities to currencies. It will impact fiscal decisions from governments. And, and if there is an extension and a renewed commitment to try and drive the price of oil up, and they're all going to have to comply to the agreed cuts, which we know hasn't been the case over the last 6 months.
I feel like that's another podcast on its own, whether they will comply or not, and compliance rates and OPEC's history of, as they say themselves, cheating.
Now, we know that Russia, for example, has cut less than half of what it committed to. Is this a fight waiting to happen? Are Saudi going to put up with this? I think with Saudi losing market share to shale and to Iran, its bitter rival, I don't think this is, unless we see results this in the next 6 months or so, I don't think this is going to continue into 2018, although it has been tabled. Now, some traders and analysts and watchers are still cautious. Al Marzouk, the Iraqi oil minister, did say before leaving his country yesterday to fly to Vienna that not everyone was on board yet. So, there's still a lot of uncertainty, and we just don't know what we're going to see on Thursday.
Iraq. Last time there was a deal, last time they talked about a deal, which was in November of 2016, some countries asked to be exempted from the deal. These countries include Iran, which got an exemption, Libya and Nigeria, both of which also got exemptions. Iraq asked for an exemption. They didn't get it. I imagine Iraq would ask this time to be exempted, but I mean, who knows? I'm pretty sure the Iraqi oil minister must not be too happy with the decision from OPEC last time, because he was obviously hoping for an exemption.
Yes, and, on this topic of sort of potential risks of extending this cut, Iraq being one, they've been very compliant as far as the data we've seen, but will they continue to be as compliant as this goes on? We just don't know. So Goldman Sachs analysts published a report on Monday that said that a 9-month extension would normalize the inventories and sort of get the production back down to a decent level. You
mean get back the supplies?
Yeah, it would reduce the glut of oil. Yes, the supply, exactly. But they said they see a risk in later 2018 of overproduction if both OPEC and Russia's production continues and also shale grows at a quote-unquote unbridled rate. So, any agreement of a deal on Thursday is certainly not going to see us out of the woods yet, right?
No, certainly not, because like you said, I mean, shale is just going to come up every time prices go up. But the other thing about the deal on Thursday is that, or whatever comes out on Thursday, is that it's pretty much priced in. I mean, traders already expect the deal to be extended, and that's, I think, priced into oil prices. So when they do extend it, there won't be any surprises there.
Right, but depending on how long they extend it for, that could still catch some people off.
Yeah, there are plenty of unknowns. How long they will extend it for, whether they will change it from the current cut of 1.8 million barrels per day to, I don't know, maybe possibly 2 is what some people are talking about, possibly more. There are certainly unknowns. There are also unknowns about which countries will be exempted and what the nature of the talks will be at Vienna.
So, for the rest of this podcast, Sarah's going to introduce an interview she did with an analyst who had some views on this deal and on the extension of the deal. So I'm going to pass it over to her to let her introduce her conversation. Enjoy.
So I spoke to Jameel Ahmad, who is the Vice President of Corporate Development and Market Research at FXTM, and he had plenty of interesting insight on oil markets, on shale production, on oil prices. So tune in. Right, so first things first, what do you think is going to happen, Jameel, on Thursday when OPEC meets? I think the consensus, like we said, is that there will be an extension, but how many months will the deal be extended by? And, I mean, also, do you think that they will increase the cuts to possibly, 2 million barrels per day or even more?
Well, this is the interesting dilemma when it comes to the upcoming meeting, because the markets are receiving clues that OPEC will agree to a production extension to extend the production cut. This is what I mean. But there's still some variables left in place, such as the duration of the production cuts and also what volume of production will they be willing to cut to help erase this ongoing glut in the market. Now, what I believe will happen is that OPEC will agree to cut production until, I would say, maybe the end of Q1 2018. It's true that the real thorn in OPEC's side right now is U.S. shale, because it's not actually the collaboration with non-members that's proven to be difficult. It's the fact that OPEC are no longer in control of the market share as what they used to be. And we're seeing this very strong correlation that once the price of oil managed to rebound and consolidate somewhere around the $50 region in 2017, that US shale producers began to turn the taps back on. And what I mean by turn the taps back on is that basically they began to increase production. So there is a bit of a cycle at play here because OPEC can agree to extend their production cuts. They can also agree to extend even more when it comes to the volume, and they could cut further production. However, the problem at play here is that if OPEC continue to make these moves, they might actually end up losing more of the market share. And there's a problem at play that shale might actually offset the efforts from OPEC over the medium term. So this is why we're saying the prices can regain some ground over the short term. But the problem in the future is that if the oil markets begin to consolidate even higher than $50, that shale might actually begin producing even more oil, and this might actually hurt the opportunity for oil to regain its ground over the longer term. So basically what we actually need to happen is this commitment between OPEC and non-OPEC members. It needs to also spread to US shale producers, but this is going to be very unlikely to take place.
Is that realistic, though? I mean, can we actually expect a deal between shale and between shale producers and OPEC?
I think that we're stretching it too far, to be honest with you, to expect a collaboration between all three different parties. But what we think is more likely right now is that these traditional oil producers, which are mainly OPEC and non-members, will continue to collaborate. They will continue to say, look, we actually need a stronger price of oil. We need it for our economies. We need it for our own companies, and it's better for our markets. This is the thing with oil, that it's such an interesting story because you've got different interests at heart. But saying that, maybe 1 year ago, very few people would think that OPEC and non-members would agree to a production cut. This did happen late last year, so perhaps it's something we can't rule out of the equation, but it's unlikely at this stage.
So back to square one then, right?
For now, the interesting thing is that nobody really knows which level is comfortable for US shale producers. We've heard before that Saudi needs oil at around $40, whereas we've heard that Nigeria needs oil at $90. Obviously, we're very far from these levels, and Russia apparently needs oil somewhere around $60, but this has not been confirmed. What we really need to know is what does shale need in order to be confident with the price of oil. Because if they are okay with oil far below $50, this means there's nothing to actually prevent them from producing even more production, whereas other economies are far, far more significant on producing oil and for it to benefit their economies.
Oh, I thought it was $50. Isn't that where shale producers can pump oil? 50 to 55?
This is what has been reported before, but really, to be honest, we've had no clarity on whether these are the levels. And part of the reason why those in the markets think it could be between $50 and $55 is because we've seen this correlation, whereas when oil managed to reach these levels in 2017, all of a sudden US stockpiles increased and shale producers seem to be pumping in more inventories, but it's never been confirmed or clarified. So that's actually kind of what we need. The markets need the clarity in order to be comfortable and know what levels US shale producers find as comfortable themselves.
Actually, on oil prices, what are your expectations for oil prices this year?
I think that it's possible that oil will maintain some sort of effort towards a climb at $60. But for now, the theme at play is that investors are selling on rallies. So once we see the price of oil manage to go towards $55, we're seeing a lot of selling pressure come into play. In order for oil to rebound and regain even more momentum over the short term, there might need to be a surprise. And by surprise, I mean that maybe OPEC agree to extend their production cut for a longer duration than 9 months. And maybe, just maybe, they will agree to extend the production cut by stronger volume. And it might go beyond what the markets currently think. This would help prices over the short term.
That's really interesting because, I mean, are you saying the OPEC deal is not enough to spur buying activity? There needs to actually be more than just a deal to extend production cuts by whatever time period? There needs to be more than just that to actually get people to buy oil?
That's the thing exactly. When you're investing, there's always a risk of fundamental news being priced into the market. And I'm looking at my chart at the moment, and I can see that the price of oil has rebounded by about $3 over the past 3 trading days, over this confidence and what appears to be some sort of confirmation that OPEC members are willing to extend the production cut by approximately 6 to 9 months. But if this news is confirmed and it's already been priced in, then there's a risk of the market still selling the news because it has been priced in.
And at the last meeting in November, quite a few countries asked for exemptions, including, like we said earlier, Iran, Nigeria, Libya. Those are the ones that got exempted. Iraq didn't get an exemption. So what do you think the exemption scenario is going to be like this time around?
Nobody really knows at this stage. And it comes down to whether they are willing to join this collaboration to support the prices of oil. Because obviously the more members who are willing to cut production and to extend this ongoing cut in production volume will support the price action. It appears that Iraq has paved the way this morning to say that they do support. Nobody really knows where Iran stands on this. I do think that Nigeria might actually join. And the reason for this is because Nigeria really needs a stronger price of oil. When we talk about economies that are relying on producing the commodity, Nigeria entered a horrific recession over the past 2 years. But one of the big problems with this OPEC deal, or in this case it's an OPEC deal with its non-members, is that it's not legally binding.
Wait. What do you mean it's not legally binding?
If it's not legally binding, there's compliance issues. And what I mean by this is that members on both sides have to trust each other. They have to trust that they're going to fulfill their production quotas, because there's actually nothing in writing to say that X country has to limit production to this amount of production. Otherwise, there's going to be repercussions. And it's all about OPEC members and its non-members, in this case, trusting each other.
So do you expect countries then to adhere to the production cuts? I think the last number I remember seeing was that the compliance rate was 105% for this deal. What are your expectations for the next deal? And I mean, looking at the summer period is when demand increases. So what are your expectations for that?
I believe that they will adhere to the cuts, and they will need to trust each other in this case, because all members, regardless of whether your business model or your profit levels are at different levels, basically, everybody understands that a stronger price of oil is beneficial for everybody. And, one of the main talking points we understood from this agreement that was made late last year was that OPEC and its non-members finally accepted that they needed a stronger price of oil, because the dramatic decline, which is nearly 80% from its peak, it really hurt these different oil-producing members. And that's on a global scale, that the price of oil will be beneficial. And what we also need to talk about, when you mentioned that this summer months that demand could increase, that we have had some positive news from the global economy this year that is performing better than expected. And the stronger the economies perform on a global scale, the more this would increase demand for oil, which would be supportive to price action in this point.
My final question, I guess I have to ask you, are you bearish or bullish on oil? And do you think fund managers should be overweight or underweight on it?
Actually, at these levels, I'm personally bearish around 50-51, because we talked about that technical resistance level earlier. And in order for oil to really be bullish and to be looking for those $60 mark, which we have not hit for a significant period of time, that trader education needs to come into play, and you need to understand the technicals, that in order for this move to happen, the oil markets really need to conclude above $55 this week, or any week from here, to believe that oil could move 60. There's an opportunity here that investors will continue to use oil as a sell-on rally opportunity. It would not surprise me that following this rebound over the past couple of days, if the oil markets come under pressure before the meeting at the end of this week.
Great. Thank you so much for your time. I really do appreciate it.
Thank you very much for having me. It was a pleasure to contribute, and hopefully we can do this again soon.
Right. And where can people find you on Twitter and on the internet? Where can they find your research?
Sure. So you can find me on Twitter at Jameel_FXTM. That's JAMEEL_FXTM. That's my Twitter page. You're also very welcome to check the FXTM website out, our social media channels, and you can find all of our market reports on the FXTM website under the markets section.
Thank you so much.
So we hope you enjoyed Sarah's fascinating conversation with Jameel. If you want to hear more of Dirhams and Dollars, be sure to check us out on SoundCloud, iTunes and Stitcher. And if you're on iTunes, please do give us a review. It really helps to make it easier for new listeners to find us. And of course, as always, we're over on www.gulfnews.com/business. And our Twitter is GulfNewsBiz. Sarah, what's your Twitter?
I'm at the Sarah Dia.
The Sarah Deer, and I'm at Ed Clowes. So give us a follow on there for the latest and greatest business news from around the region. And tune in again next Monday for a look ahead at the biggest stories next week. Bye-bye.